Let's talk about what we're looking at on this day. First thing, what do I want to always start off with? Look at the number one top gainer. When I look at the number one top gainer, I see LSDI. This stock is currently up 352%. This stock has 1 million in float. Obviously, from our previous lessons, you guys know, hey, a stock that has 1 million in float, that's up 352%. This stock better have some sort of amazing press release behind it. It has monster volume at this moment. Stock is going absolutely crazy. This is a play that definitely has a lot of room to fall. If a stock has spiked 350% on the upside, it has room to fall all the way back on down as well. So let's do a little bit of a deep dive in on this play right now and try to figure out, is this play actually worth our time? You might notice my news scanner is not here today. So let's go ahead and do this the old fashioned way, looking up the news on what's happening over on LSDI and why this play might have some activity towards it. So when I take a look over on LSDI, I don't actually see any news at all this morning. LSDI, when I take a look over on this play, you guys can see, here's LSDI 15 hours ago was the last press release, not this morning. And the press release that came on out wasn't even a press release. It was a filing. There's nothing really on LSDI. This was, again, a filing, a 10Q filing. So what is a 10Q filing? This is basically just giving us a little bit of a quarterly report. So it's giving us a quarterly update, okay? So we have a quarterly report, which is almost just like an earnings report. So our earnings report's the biggest thing in the world. Should earnings reports lead to 350% spikes? In most cases, no, right? They really should. So I'm asking myself at this moment, LSDI, this stock has gone from 58 cents all the way up towards $2.30. What is going to happen here? How are other traders going to perceive this? Now, I know as a shorter, I know that this stock has a better chance of falling than spiking. Let's take a look at the past chart history pattern together. Traders, what has LSDI done over the past year? Over the past year, it has gone from $40 and has faded and fallen and dropped and got weaker and weaker and weaker all the way down towards 46 cents. Do you guys think that a quarterly report is going to make this stock spike all the way back up to $40 and actually be a good play? No. This play is going to do exactly what it did probably right around this area right here, right? Where the stock just went on a big time spike, came right back on down. So it's going to be very similar to that manner. So we already know that LSDI is going to give back all of its gains in the future. We already know that LSDI is most likely going to have a big crack, big fall, and probably be back underneath $1 in the upcoming days, the upcoming weeks. But the thing is, LSDI isn't going to get any hype at the start of the day. You can't just say, hey, Deck, let's go ahead and short it right now at $2.15. Because what if it runs up to $3? What if it runs up to $4? What if it runs up to $5? So really the secret that we're trying to do here is we are trying to wait for the spike and then get it as it's starting to reverse on down where it's pretty much done with. To go ahead and short plays right at the start of the day is a little bit scary. Now you will win some, you will lose some. And if you are willing to hold, you'll probably win a lot of them. But are you willing to hold if LSDI goes up to $3, $4, $5 and keeps on squeezing, right? So that's the issue there. You don't want to just get squeezed and keep going higher. So we want to look at where is there again some areas of resistance, right? So always again, we grab the daily chart and we try to figure out where there are going to be areas of resistance on this play. Now the easiest area to be able to see resistance is going to be, first things first, the 200-day moving average. So I can realize a very popular indicator right here, 200-day moving average, that's going to be a strong resistance line. That's at the price of 326. If we get up towards around the price of 326, that's going to be an area that most likely we are going to start turning and falling at. Now 326 is a great area, but I'm also looking at a lot of the previous history here. And I can actually see some old bottoms kind of line up with a lot of old tops. I'm actually going to adjust this line here. And you know what I see a little bit better? I see kind of right around this, 290-ish mark is actually a little bit better. And just take notice of this. The lower shadow bounces off 290. Lower shadow bounces off 290. We basically are sitting right at 290. Then of course, what happens? We have top resistance at 290, top resistance at 290, top resistance at 290. You can see we have some resistance right around like 285 right here. So I'm saying if again, LSDI spikes on up, I think 290 would be a great area, or right around 290 would be a great area where traders would be saying to themselves, hey, there's an opportunity we start giving some back. If this stock continues to spike up even higher, it would be right around that 320-ish mark. Now, Deck, what if it gets above 290 and what if it gets above and holds 320? Then unfortunately, you have to get out. You have to get out and you have to say, okay, let me figure out where it's going to be going up next to. Could it get up to $4? Could it get up to $5? Could this keep going higher and higher and higher? So the thing is, LSDI right here, this is the play that I definitely want to be keeping our eyes peeled on. Now, I posted this over in chat as well, where I put in earlier here today. Let's see, this was at the time of what? This right here, I said, if you wanted to short this play, this was at 8:42 in the morning. So about 45 minutes ago, those were the locate fees. It costed $5 to short LSDI. Let's see what the locate fees are now. Because remember what I told you guys yesterday, first come, first serve. The people that locate their shares early are going to be the people that, again, are going to be getting the best price. Doesn't mean you got to jump in. It just means you have to locate your shares early. So let's see what we have here. If I go over over to LSDI, right? Let's go to cancel this. LSDI, are they still $5? I don't know. I haven't checked. Let's see. Locate. Nope, they're still $5. So boom, that's great. So they didn't go up in price. I actually thought they might have gone up in price, but it's great that they didn't go up in price. So, everyone could still be able to get their locate fees for a relatively good area. So if you are 100% set saying, Deck, I am shorting LSDI at some point throughout today, you can go ahead and you can pay that locate fee if you guys would like to. So that is definitely going to be something that, you guys would be aware of. Now, if you guys are very interested on this play, let's keep our eyes peeled on it right at the start and see what happens. So let's see how LSDI opens on up. See if LSDI opens on up with a quick little hold, quick little spike, what this play may be doing here in the near future. LSDI already started on off with a little bit of a morning drop. LSDI, as you guys can see, people are shorting this play, already starting to get weakness right off the drop here. What do you guys do next? Now you guys head on over to www.nasdaqtrader.com/trading halts. And what do you guys realize? LSDI. LSDI is halted at the time of 9:30 and 45 seconds. It will be getting unhalted at 9:35 and 45 seconds, right? So we will be getting unhalted in about 2 minutes from now. And this gives you about 2 minutes to figure out, okay, is there going to be a bounce play or not? I can ask the chat right now. Is there any person at this moment that pulled the trigger on the short side right when this opened on up? LSDI, it's up over 300%. LSDI has all this room to be able to fall. LSDI is a stock that has been fading and falling for the last 9 months. LSDI is a stock that is almost guaranteed to give back all of its gains in the next few days. But what's the issue is? The issue is there's still traders out there that says, oh, Deck, can I buy LSDI? Hey, it's like when I go on Twitter, I feel like everyone's like in a different world. I guess it's almost like the Matrix in a way, right? That you just you don't understand that there's so much more out there, right? So it's I get this question. I literally saw this question today. Someone hit me up on Twitter and they said, Deck, LSDI, you see it's up over 310%. I'm buying in right now. There's just some I can't help. If you're buying into a stock that's up over 300% with no news other than a quarterly report on a stock that has a low float, you have to know this is just a social media pump. This is just a pump play. Yes, this play again has been falling for the last 10 months. This play is up 300%. It's probably going to give back all of its gains. This play is a low float stock. It's going to dump. So do you think there's a little bit left on the upside? Oh, baby, I just want to buy it. Oh, I just want to buy every play I see. I don't want to miss out on it. It's guys, just short it. We got to wake up here a little bit, people. These are things that we got to be able to figure out, be able to become better on day in and day out. LSDI is now live. Let's see if this one is just going to dump on off here. I would love it. I would love if it was able to spike back on up. I would love to see if this one was able to spike back on up. I would love to see if this one was going to be able to get that rip and run. Guys, it looks like it's about to get halted on the downside once again. Remember, we got LULD, limit up, limit down. LULD, limit up, limit down. Are we halted yet? The answer is no. Remember, we have to wait until we're zeroed out to get halted. And there's the zeroed out and we're halted again on the downside. So Deck, if I shorted this play, guess what? You would have made money. So starting off at the very beginning of the day, very risky to short plays right at the bell because you could always get that initial pop. But guess what? This one opened on up and it dumped on down. And now guess what? This is where I go on Twitter. This is where I go on Stock Twits. This is where I go to my emails. And this is where people give me this question. They say, Deck, the stock market's so unfair. Every time I buy a play, it does the opposite thing I want. Every time I buy a play, every single time I buy a stock, it always goes against me. And I say, didn't you just buy a stock that's up over 300% that's been falling for the last 10 months? And every single time it spikes, it gives back its gains? Yep, that's the one I bought. Exactly. So what are you mad about? Well, every time I buy it, it goes down, right? So we just honestly have to start thinking these plays through a little bit more. These are, again, plays that we have to, again, start saying to ourselves at this moment, obviously it's going to fall. So let's, again, be on that side that there's a more opportunity for us. So great to see over on LSDI right here. Now, LSDI is back and live. And as you guys can see so far, take a look here. Let's go over that. Something very important, traders. What did I teach you guys yesterday? Who can take a guess on what I'm about to say? I taught you guys 3 trading strategies yesterday for shorting. These are my favorite ones. These are the ones that work. These are the ones that, can make you guys a lot of money. What were those trading strategies yesterday? Quick little recap. Number 1, those are going to be upper shadows, right? Number 2, shorting previous top gainers. The stocks that, again, were the best spikers yesterday. And number 3, this is hands down the most profitable, shorting pre-market top gainers. Stocks that, again, gap up 300% and now have all this room to be able to fall. And I showed you guys how every single gap up has a monster dump, right? Every gap up has a monster dump. Every gap up has a monster dump. Take a look at what's happening over on LSDI today. Hello, baby. You guys can see, again, gap up towards, again, 215, and now it's dumping back on down towards, again, 170. So you can see how just like this is already what I'm teaching you is already working. FFIE, this play, trying to work its way on up. FFIE right here. What is so important about this one? This is a meme stock. AMC, FFIE, GameStop. These are all meme plays. FFIE has strong $1 resistance. So $1 is going to be very strong strong resistance. This is where we turned off yesterday. Now, what do you guys realize? $1 is usually a very strong resistance area. So you guys can see right here, $1 top resistance gets a nice pullback. $1 top resistance gets a nice pullback. $1 usually gets a top resistance, we'll get a nice pullback. If FFIE breaks $1, that's where we're gonna spike on up. Get out of your own bubble. That's what I gotta say to you guys, and that's what I say to myself every single day. I try to be non-biased on my plays. I don't sit here and I say, what am I gonna trade today? What am I gonna jump in on today? What am I going to do? I try to look at a play and I try to get outside of my mind and I say, how does everyone else perceive this play? Well, I could sit here with all my might and say, please break $1. Please go above $1. Or I could say, it hit $1, it's sold on off. It hit $1, it's sold on off. Probably if it hits $1 again, it's probably gonna sell on off. But if it breaks $1, then yes, that would probably bring in a lot of excitement. So I'm trying to, see it. How are other people seeing it? I'm trying to see it on how other people are realizing these plays. I'm trying to see it on how other people are doing their moves here today. So that is going to be extremely crucial that every single trader understands that you want to be seeing how other people perceive these plays. Now, how do other people see $1? I'll tell you right now. $1 is a strong psychological number. It is only from 99 cents to $1. There's not that much big of a difference. It's 1 penny. But to the average trader, no, it's way more than a 1 penny. For the average trader, going from 99 cents to $1, that's now a dollar per share company. We're going from penny stock to now dollar per share on the company. And that's what's bringing in a lot of excitement. That's what's bringing in a lot of hype. That's what's bringing in a lot of action towards it. So I want you guys to realize that these psychological numbers are always going to be areas that we reverse at. You might say, Deck, well, what are the psychological numbers? Psychological numbers are going to be $1, are going to be $5, are going to be $10, every $5 increment. So $15, $20, $25, then $50, then $50 increments, 50, 100, 150, 200, 250, then $250 increments, 250, 500, 1,000. These are going to be huge numbers. When you kind of break into the next level, it's very difficult to do. From this point on, you will start realizing that stocks tend to always turn at the $1 mark. And you will realize that stocks always tend to turn at the $5 mark. And stocks always tend to turn at the $10 mark. And we usually see these areas always have some sort of turn. So I don't want to get too into it because we have a whole entire lesson on it, but just giving you guys an update and an understanding of what we have already at this very beginning. What is stock trading about? Let's start thinking about this question right now. What is stock trading really about? Is stock trading about buying stocks low and selling them high? Is stock trading about trying to find what's the best play? To me, as a day trader, I'm not looking for what's the best company. I'm not looking for what's the best buy. I'm not looking for that. What I am looking for, the number one thing is I am looking for reversals. Because as a day trader, that's all I care about. I know it sounds mean, but I do not care whatsoever about the company. I do not care whatsoever about what the CEO is doing. I do not care whatsoever about what their earnings was. I don't care about that. All I care about is where is this stock going to reverse? Because guess what? We make money when a stock is moving up, moving up, moving up, moving up. And then if we see that there's a good reversal, guess what happens? This is where we make money as the stock starts coming back on down, back on down, back on down, back on down. If we can figure out where do reversals happen, that's where we make cash. Now you could look for reversals on the top side and get shorts. You could look for reversals on the bottom side and be able to get nice dip buys and bounce plays as it starts working itself back on up. Remember, reversals are beautiful. Reversals are absolutely amazing. Reversals are, again, times that you guys can be able to jump in on plays and say, wow, this is absolutely fantastic. Wow, this is absolutely great. I want to be able to find where reversals are truly at. Okay? That's what I want to look for. So today, what I want to teach you guys is about figuring out how can we be able to find reversals? How can we be able to figure out where these reversals are going to happen? Now, there are about 3 different main ways to be able to figure out where reversals are going to happen, right? The first way is going to be talking about natural resistance. So natural resistance. This is going to be a lot of that psychology, okay? So natural resistance is going to be kind of those dollar marks, those whole dollar marks that I'm talking about. So let's start with natural right now. Natural resistance, okay? These are going to be reversal areas. As I said, strong psychology numbers. Strong numbers where people are just going to kind of say, ooh, I don't know if we're going to break that barrier. Even though it's just a penny, going from $9.99 to $100 per share, people are going to say, ooh, that's only a penny, but that's now $100 per share company. So the perfect example we have right here is FFIE. FFIE right now is starting to squeeze and is starting to break because it had a very strong psychological number. Take a look here. What we have right here, FFIE. Stock goes from 40 cents and spikes all the way up towards $1, right? That's awesome. Everyone sold at $1. How does everyone know to sell at $1? Well, because guys, it's kind of like an unwritten rule. If you go from 40, 50, 60 cents and you run up to $1, this is where you lock in profits. You are now going from a penny stock to now again $1 per share. Whoa, that's too strong for me. That's too strong of a barrier for me. Let me go ahead and start moving on from this play. Let me lock in my profits when I have them. So guess what again happens next? This stock starts coming back on down. You can see it tries again. No. Too strong of a barrier, comes on down. Too strong again. Guess what happens? It goes, nope. Too strong of a barrier, starts coming on down. And then guess what happens? FFIE finally breaks it. And you're wondering why FFIE is going on this very big spike. You're wondering why FFIE is bringing this big time momentum. You're wondering why FFIE has this hype and has this action towards it right now, because it is breaking this barrier, and this barrier leads to breakouts. But you know what I've learned? And you know what I'm already seeing people in chat talk about here, guys, is they're saying, Deck, FFIE is breaking on out. And I say, okay, who cares? And we say, Deck, well, breakouts are so awesome. Guys, I'm not here to play breakouts. Let me show you guys something. FFIE at this moment had one attempt. If you try to break $1 right here, you would have taken a loss. And you say, okay, well, you know what? I'm going to try to break $1 right here. You're going to take a loss. Okay, well, I'm going to try to break $1 right here. You're going to take a loss. And now people become obsessed. Remember, you're going back to your old ways right now on saying, oh, I want to nail this breakout. I want to nail this spike, because now it would be finally the win. So you're telling me, what do we have here? If we try to buy it on the first one, we lost. The second one, we lost. The third one, we lost. And finally, if on the fourth one, we would have won. So that would have been, what? 3 losses here, right? 3 losses, and we would have had 1 win. Okay, is that what we want? No, 1 win. That means we have a 25% chance of winning. We have a 75% chance of losing. And still, we're going back to our old ways right now. I'm saying, oh, well, Deck, I want to find the breakout. So you want to have the 25% chance of winning and the 75% chance of losing? Why not reverse that? Yes, it is cool when we see breakouts. It is cool when we see moves. But we want to realize that if we can understand where these natural resistance lines are, that is where the stocks are most likely going to turn. So that is what we're always focusing on. That is what we're always looking at. In many cases, we will see stocks turn at these natural resistance lines. Now, the strongest resistance lines are going to be at the price of $1, $5, $10, $15, $20, $25, then again $50, $100, $200, $250, $500, $750, $1,000, right? These big numbers are going to be very strong resistance. But you guys want to know even something better though? On the smaller micro cap plays, the plays that we're going to be trading a lot of times, you are going to want to focus on 1, 5, 10, 15, 20, 25. That's what you guys are going to want to be focusing on, kind of $5 increments. But within those strong major lines, we will have minor lines. So I kind of want to write this on out and say the strongest. So let's put this on a scale right here. And let's say the strongest resistance lines where we almost always see turns first time we touch. Now, I do want to have something right here. If you guys touch it once, touch it twice, touch it 3 times, yes, eventually we're going to break out. But if I'm talking about the first time we touch it, if we touch it once, there's usually always a guarantee we fall. If we touch it twice, it usually falls as well. But if we keep building higher lows, then yes, we can break out, because that shows strength, just like we saw in FFIE right there. But I want to show you again the numbers and the lines right here that are number 1, the strongest. Then on top of that, number 2, let's just say relatively strong, right? And number 3, let's just go with, solid, right? You'll see reversals at these every now and then. So as I already stated, the strongest lines of resistance are always going to be $1, $5, $10, $15, $20, $25 in the smaller plays. So it is every $5 increment, just a little heads up for you guys. Now, still relatively strong numbers are going to be every whole number. It's very difficult for a stock to kind of break through a whole number, which will be, let's say 1, 2, 3, 4, 5, 6, etc., right? As it goes on up. And you will see for smaller plays, right? It'll be more every like 50 cents, right? So it might be $1.50. Then it'll be $2.50, right? Then it'll be $3.50. So maybe even $3.75, like kind of within this region. So you always want to realize, hey, if we're coming up to a strong resistance line, these areas we usually always turn on the first time touching. Then of course, we always want to be aware that we can turn on whole numbers. And then every now and then, we might just turn if it's a very small play on the $50, $52.50 area. So I just want to go through some examples here on today. Remember team, I like to look at today's examples. I don't want to show you guys about textbooks that happened, back in 2009 on times that these happen. I want to look at today's examples and see, do we have reversals of today? Well, what do you guys realize? We realize we run up towards around $3, right? And guess what happens? The stock starts falling on down. There's again going into not the strongest resistance, but we do have these reversal areas right around $3 right here. LSDI, what do we come on up to? Right near again that 250-ish mark. We had some trouble over on LSDI. Again, LSDI, what really happened on this play though? It's when it broke through $1. When it broke through $1, that's where the stock started getting very crazy. Started getting a ton of momentum, started getting a ton of action. That $1 break here. A lot of times you want to wait kind of after these stocks break out throughout the day of where these are going to reverse. And also helps when we have a little bit more breakouts. Look at what FFIE is doing right here, team. Again, don't fall back into your old habit habits. Oh, Deck, you know, I'm sorry. I thought the stock was going to break out. I only wanted a 25% chance of winning, so I jumped in on this play and I'm in the red. Why is it every time I buy a stock, it falls on me? Guys, these aren't good companies, right? Take a look at past chart history pattern on FFIE. FFIE, where was it all the way up to? It was at $117. It's now at 94 cents. Is this a stock you want to buy? The answer is no. Let's stop being crazy here, okay? So, first thing again, always be watching natural resistance lines, okay? So, natural resistance lines is where we always want to be looking at. What is next on the spectrum? Well, next on up is going to be, first we had our natural, which is going to be those whole numbers. Next on up is going to be extremely important as well, which is going to be previous chart history. So previous chart history. Now, what you guys will notice a lot of times is that things will add up. So what I mean by that is you guys will notice that your previous chart history pattern, stocks will tend to reverse at natural resistance. And the fact is, if we have natural resistance and previous chart history lining up very nicely, well, that's just going to make things even better for us. So let's take a look at some examples here. Let's take a look over on LSDI here. LSDI, how do I look at previous chart history pattern? What I'm always going to do is I'm going to look to see where is there a straight platform? Like where is there going to be an area where it seems like we always bounced off of, and where is there an area that seems like we always got rejected off of? And this is going to take a little bit of practice. So what I would do is I would try to ignore today, ignore this candle right here, and try to take a look and say to yourself, is there an area, is there a price that I see every single time we hit, we fall, or every single time we hit, we bounce? I'm going to say I do see an area that seems like we bounce off of every time, and that's going to be right around this mark. Would you guys agree with me that every single time in the past, it seems like we bounce off again 190, bounce off 190, bounce off again 190, bounce off 190. You can see top rejection at 190, top reject. So I would say, okay, 190, ooh, we're underneath 190. This is probably going to be an area of resistance. Would that make sense to you guys? So basically what I'm trying to get to you guys at this moment is if we are underneath, right? If we are underneath 190, okay, we fall underneath 190. 190 is an area that people bounce off of. It's going to be holding up as a ceiling. It's going to be holding up as a roof. If we are on our floor right now, okay, you're on a floor, you bounce on your floor. Now imagine if you go downstairs. If you go downstairs, that's now your roof. So the thing is, if I realize that we have bounce here, bounce play here, bounce play here, bounce play here, bounce play here, guess what? This 190-ish mark is most likely where we're going to touch when we're underneath it, and then we're going to go down. LSDT. Is it funny that this morning we fell on down, then we tried to get back above 190, and then we collapsed all the way back down lower? We fell on down underneath 190, we ran up to 190, we hit the roof, got rejected, and then came crashing all the way back on down here. So you're wondering, Deck, why the heck did again LSDI start falling right around this 190 mark? 190, we hit it and we got a super strong rejection. Past chart history pattern just told me that answer. So the same exact thing when I go ahead and I say, okay, well, how high can this play go? I start asking myself, and sometimes I just take a line just like this. Let's take a line, and you can see, okay, 190 looks pretty clear. Is there another area that looks very clear on like, okay, where can I be able to see this, turn and fall? So I see a top right here. I see a top that lines up right here. Maybe a top right here. Would that line up to these old tops over here? So let me put a line like right around this region, and with this line on up. Ooh, this looks pretty good, right? Look at this. Top resistance right around 285. Top resistance 285. Top resistance 285. Top resistance 285. Bounce play off 285. If we ever start spiking on up, this would be a great area where it's our roof again. Hey, boom, go all the way back on down. So we would be able to see that LSDI, this would be a great play for us to be able to see this one, be able to spike on up, hit this mark, and fall back on down. That's looking at past chart history pattern, right? Let's take a look over on, let's say, BMTX here. BMTX, this play. This is kind of a more choppy little play here, but let's go ahead and take a look at BMTX, okay? BMTX, try to practice right now. Everyone pause the video, take a second. Where do you see, don't look at today's candle, where do you see a platform? Where do you see an old floor or an old ceiling where if we hit that area, we are going to fall and reject on down? Take a second and try to figure it out over on BMTX. I can see it, but again, it takes practice. Now, what I see at this moment, traders, is I see a couple different areas. I would say number one, taking a look, I see we have a bounce play right here. I say we have a bounce play right here. I see we have top resistance right here, and this probably all lines up in some manner. So let's go ahead and put this right here. This would be an area that I would definitely be starting off at, right? That would be a nice area. But I think a lot of you guys are probably looking a little bit higher, which is fine, which is great. Because I do see that we have a lot of strong resistance, I would probably say, right in this area, right? This one is a little bit tricky because you could go a little bit more sporadic, right? But like 385, I would say it would be the best area total if we start seeing a spike. We start seeing a little consolidation back here. We have top resistance got rejected. A little bit under, got rejected. Hit the top resistance, got rejected. Right to not 285, but to 270, got rejected. That would be a great area for me to go ahead and start looking for a reversal, because what has happened in the past usually happens in the present. If we got rejected at 385, people say, okay, 385. We got rejected at 385, people say, okay, 385. And sometimes you can scroll back even farther and you can say, oh, wow, okay, hey, these are going to be good areas. I'm going to give you another example here. Another example would be, take a look at this spike on BMTX. BMTX spiked all the way up to 1460. And then again, a couple months went by and then BMTX started spiking its way back on up. Where did people sell this play? They started selling it when it got back up towards around this old top, right around that 1460 mark. So it's not like these numbers, these plays, these stocks are going up to random areas. These plays are usually going up to and turning and reversing at an old previous area that everyone sold off at as well. Because when you're buying a stock, everyone says, where do I sell at? Where do I sell at? And everyone says, oh, sell at the area that everyone sold off at last time, because that's where everyone's going to sell it again. So where it sold off last time is now in our head on, okay, this is where it's going to start turning and reversing. And since everyone's looking at that area, guess what happens? It now comes crashing back on down as it follows that area. So let's look at some more top gainers here today. So traders, take a look at this. CCLD. This is a perfect example. And remember, guys, this is not me looking through a textbook. This is not me, again, looking at, random areas here and trying to be like, okay, what actually works here? This is looking at today's top gainers and giving you the answer. So CCLD, why did it turn at where it did? Okay, I'm going to change the question up a little bit. Why did CCLD turn at this price right here? You can give me two answers. Easy, 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 easy. Well, Dak, number one, it turned just because it hit $3. $3 you just taught us was a natural resistance line. It's going to turn around $3. Boom, perfect, right? CCLD, it's a whole number, $3. That is absolutely great and absolutely awesome. Now, traders, what else can you guys see out of this play? Well, does anyone else notice that it bounces at $3 and bounces at $3 and bounces at $3 and bounces at $3 and bounces off? Put a line right at $3. Put a line across the board at $3. Can anyone else notice that this is where the stock bounces almost every single time, right at that red line? Bounce, 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 monster sell-off. Where do you think people are going to sell this play? They're going to sell this play every single time as it comes up to $3. So it goes on a monster spike. Sure, let it spike, let it spike, let it spike. And then guess what? At $3, we know that we are going to get a reversal. We know that we're going to get a drop. We know that we're going to be able to make money. We know that we're going to be able to profit. Traders. Traders, it's amazing. It's so awesome how you guys can put the odds in your favor right here, right? We were bouncing on the floor, bouncing on our floor here. Now again, we're underneath the floor saying, hey, let me in, let me in. And again, it goes right back on down. So you guys can realize these plays on how the past chart history pattern can tell us when we're going to fall. Now remember, is CCLD a good play? No. Again, guys, none of these are good plays. So I'm going to say it now. I'm going to say it a bajillion more times. Get it out of your head. Get it out of your head of buying penny stocks for, again, $1 million profits, when instead wait for other people to pump these plays on up and then make your millions as the stock falls on down. Make your profits as the stock drops. These aren't good companies. Why are we trying to nail a 1 in 100 when we can nail a 99 out of 100? That's when we will make our money. You guys will be much better. You guys will be much more consistent. You guys will make a lot more cash here. So I just went over, again, 2 different ways on how you guys are going to be able to find reversals. Reversals are going to be from natural resistance, and reversals are going to be from chart history resistance. And both of these can also line up. Now, also, we might be able to line ourselves on up with another one as well, which is going to be our detailed resistance, or again, I would just say some indicators. Okay. So indicators. So let's put on the popular indicators. Popular indicators, guys, as you guys know or may not know, that I use 200-day moving average, 50-day moving average, and 13 EMA. So these are going to be indicators that I like to use: 200-day moving average, 50-day moving average, 13 EMA. Now, the whole point of these is they usually hold up as a line of resistance. When a stock goes on a very big spike, it usually reverses right around these averages. So let's just kind of look at a few different examples, see if there's anything that's really good for us. I mean, starting on off, let's just take a look over on LSDI. LSDI, you can see it usually stays underneath this 50-day moving average. Usually comes up to the 50-day moving average, falls underneath it. You hit the 200-day moving average, gonna hold up as another line of resistance. Okay? FFIE. FFIE, everyone sold. Where at? The 200-day moving average. Very big spike, hit the 200-day moving average, everyone sold at that area. So the 200-day moving average is kind of always a little bit higher up. It's always for the breakouts for these penny stocks, because these penny stocks have been fading and falling most of the time. So the 200-day moving average is always like above. It's kind of like always the target. So same exact thing when I take a look at LSDI, you can see it's like always the target we want to try to get up to. In most cases, it will always be like the target. It's always going to be like the idea. So if you ever see a stock that is spiking like GV, what would be the target? 200-day moving average. Everyone would sell. It's kind of like the unwritten rule. Okay, hey, everyone go ahead and look to sell when you get on up towards around this 200-day moving average. Okay? So what I wanted to talk about right here was understanding that we're not looking for what's the best play. We're not looking for what's the company's fundamentals. We're not looking for what's the next moonshot. We wait for the moonshot to happen. We wait for these crazy ones to happen, and then we just make money as it falls. How do I know when these plays are going to fall? Well, we can look at natural resistance, so we have a better entry. We can look at detailed resistance. We can look at all these different opportunities for us to be able to make this big time money and be able to make this big time profit. Now, the big thing, team, is we got to talk about entries here. We have to talk about what is the right way to be able to enter onto these shorts. Now, entering sounds easy. Deck, I just click short. I'm in on it. That's not the best way that you guys want to do this. Okay? If you guys are a TradeCaster member, you guys have heard this method before, and I want to again, talk to you guys about this method. But we are going to talk about averaging in the imaginary box, basically DOAing, dollar cost average, or DCAing, dollar cost average, and we want to be able to make sure you get the best entry possible. So if we already take the last 3 days that we've learned and bring it over into our 4th day right now, we are again figuring out already that these plays are going to fall, and we are now trying to figure out how do we get the best entry possible. Deck, we learned about shorting. We learned about these plays going on big time breakouts. We can wait for these big time breakouts. And we just learned again about 10 minutes ago where to be able to look for these best entries on shorts, such as around $1 on FFIE, or again, whatever play, LSDI from past chart history pattern, or again, CCLD, looking at $3 natural whole resistance and lining up with past chart history pattern. So let's take a look at CCLD, for example, right? CCLD traders, CCLD, this was a great one. Very easy, very simple. You guys can see that every single time this play comes on up towards around the price of $3, it gets rejected. Now, in this case, CCLD, bounce, 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 sell off. Then it came up to $3, hit $3, which is a whole number and previous history. We're all set, ready to go. So you know what sounds easy? It sounds easy just to go ahead and say, well, Deck, I just click sell at $3, or I click short at $3, and I'm going to be in on this play. It's not as simple as that. Because a lot of times, guys, you might say that a stock is going to be at $3 resistance, and then guess what the stock does? The stock, again, will come on up towards the price of $2.95 and fall, and then you miss out because you were waiting for $3. There's also times that a stock will run on up towards $3, runs up to $3.10, you get scared, you get out of this play, and then guess what happens? The stock then starts falling on down. So this one was perfect. It ran right up to $3, get filled on it, fall back on down, you make money, right? Beautiful. But let's talk about ways for us to be able to make more money. Let's think about ways for us to be able to not miss out on plays and us to not be scared on plays, okay? So let's talk about how we can do this. What we are going to want to do is we are going to most of the time want to look for multiple entries, okay? Now, I will say this right now. If you are underneath the PDT rule, you will not be able to do this because you are only allowed to have 3 entries per week. So I want to make sure that we are kind of stating that right now, that the PDT rule is going to affect some traders on entering multiple times. The other side is, though, guys, we can be looking for selling the same way. Selling, you can sell as many times as you would like. So you can sell as many times that you would like. Little bit of a heads up for you guys. It's just for entering a play. Now, let's go over this and let's understand this. All right. So what we have is we have $3 resistance, $3, and let's go across the board. The best way to enter is, yes, traders, always try to get in right at $3. But $3 is what we actually want to have as our average. We know, as I already stated, there are sometimes the stock is going to run on up and turn at the price of $2.90 and we're going to miss out on it. And there's going to be times that we run on up, we get filled, it goes a little bit higher, we get scared and we get out, and then it turns and falls later on. So the thing is, we want to average that $3 mark. So this is how I want you guys to start trading with, again, penny stocks, if you guys can, is I want you guys to realize, okay, $3, CCLD, that's going to be a great area for a reversal. Now also, little side note, team, this is, what did I say earlier? The first touch of previous history gets a reversal. First touch of whole numbers, get a reversal. If we keep hitting $3, just like on FFIE, eventually we will get a breakout. So please don't see a $3 touch 1, 2, 3 times, then you short it and you get mad at me when it gets a breakout. It's the first touch is always we get the pullback. Second touch, third touch, fourth touch is now showing strength as the stock is moving itself on up. So please have that into consideration. It's always the first touch. Now, what are we looking for, guys? We are looking for what we're calling averaging in, which is going to give us the best entry possible. So let's say we want to get 1,000 shares on the short side. 1,000 shares on a $3 stock is going to cost us $3,000 as an investment, okay? And we have seen this stock, let's say it's FFIE or something, coming all the way from way down yonder, which is 80 cents. And it's going higher and higher and higher. And we say, I think that this stock is coming on up to almost 300% in gains right now. I think that this stock at this moment is going to turn at $3. So if that is your thought process, first thing that you guys want to do is you are going to want to break down this 3,000 shares into 1,000 share increments, okay? I am going to put 1K shares, 1,000 shares right here. This is going to be at the price of $2.90. So I want to get filled at the price of $2.90. Why do I want to get filled at the price of $2.90? Well, as I said, if this stock hits $2.90 and goes up to $2.91, $2.92, and then starts falling back on down and we don't exactly get to $3, hey, I already have 1,000 shares filled on this play, and at least I have something now in on this play. At least I have something that I'm making money. And if the stock goes from $2.90 and falls all the way back down towards the price of $2, well, ladies and gentlemen, guess what? I just made $900 from that. That is awesome. So that's a 1K investment. That's not that bad whatsoever at all, right? So now with that being said, at this time, traders, what else are we going to want to be looking for? We are going to want to be going up even a little bit higher here, right? We want to be saying to ourselves, all right, this play, I want to average up if the stock runs up to $3 now. So as the stock is climbing and as the stock is moving itself on up, we get filled. And let's say it runs up to $3 now and goes up to 301, 302. We are now going to have another entry right at this price. So we are going to get filled again right at the price of $3. Now we had an entry at the price of $2.90. Now we have an entry price at $3. If we have these averages, if we have these entries, guess what? We have a new cost basis. Our new cost basis is going to be $2.95, which means we don't need to go back underneath $2.90. We need to go underneath $2.95 to get into the green. So we don't start making money here. We start making money up here, which is even better. So now guess what happens? The stock starts fading and falling, and now we make money, double the amount of money. We make double the amount of money because we have double the amount of shares in on this play. So that is absolutely great and awesome. Now let's say the last case scenario. Last case scenario is that we keep going on up and we hit the price of 310. And we hit the price of 310. Guess what we do? You guys can imagine. We get our last entry. We got our last entry right here. Now, getting our last entry, we are filled on this play. We have a total now of 3,000 shares over on this play. And guess what? Our cost basis, since we got filled at $2.90, since we got filled at $3, and since we got filled at $3.10, what's the average of all three of these? These are going to be, the average is going to be $3 on the dot. And now we have 3,000 shares. And if this stock turns and falls and goes underneath $3, not $2.95, not $2.90, $3, now we make money all the way on down. And if it goes on down to the price of $2, we make $3,000 in profit, which is amazing. So what we're basically doing right here, team, is we are giving ourselves the best price by adding more money where we need to add. Okay? Now, the other issue is people don't like this because they say, well, Deck, what if it breaks through this area? Well, I'll tell you guys right now, if it breaks through your top tier, your top area, right here's your stop loss. Okay? So the thing is, you got filled at $2.90, you got filled at $3, you got filled at $3.10. The last thing you want to do is allow this play to keep going higher and higher and higher and higher, and then you just lose a ton of money. If you are going to use this and average in to get a better entry, guess what? You are going to want to have a stop loss right here so that if it does keep on going, guess what? Worst case scenario, you lose $300. What if the worst case scenario was you lose $300, but the best case scenario was you get the reversal, you get the turn, and you make $3,000? You are making 10 to 1 money, 10 times what your loss would be, right? So that is what is so incredible and so great about this. Now, what is so awesome as well is people like to change these numbers around a lot. And this comes down to your strategy. Does it have to be 1,000 shares? No. Go off again what you're thinking. Guys, do a Deck, I only have a little bit of money in my account. Okay, if you only have a little bit of money in your account, instead of doing 1,000 shares at each place, why don't you just do 200 shares? Do 200 shares here, do 200 shares here, do 200 shares here. And you know what you'll notice? Sometimes you don't get filled at all, as I said. You get filled at $2.90 and it falls and you make money. It won't be that much money, but you make some money. And some money is better than no money. Sometimes you get filled with $2.90 and $3 and then you make money here. Sometimes you get filled with all three and then you make all the money here. And sometimes, again, you get a little stop loss, get on out, and you lose, again, a very small amount. But this is allowing you to get every single entry possible on the best average possible. Now, I'm going to show you guys a couple different little strategies here. Some people also do this. Some people don't like to do 200 shares. Some people like to do it in this way. They like to say, hey, Deck, I'm going to do 500 shares at $2.90. Then I'm going to do 1,500 shares at the price of $3. And then at $3.10, I'm going to do 3,000 shares. Now, you adjust this to your account size, right? You can change these numbers. But why would someone want to do this? Because, guys, remember when I said if I was getting filled at $2.90 and then $3, I would have an entry price of $2.95? If you have a smaller amount, 500 shares down low, and then you get filled at $3 with 1,500 shares, your cost basis is no longer $2.95. Your cost basis is now $2.99 because you added more money up high. So now you only have to go a little down to go lower. Now imagine if you add 3,000 shares at the very tippity top. Well, your cost basis is no longer $2.99. Your cost basis is going to be up towards around like $3.07. So the thing is, before, if you again had this, you had to get back on down towards the price of $3, right? Now you only have to get back on down to the price of $3.07. So what a lot of people like to do is they add more shares, more amount. They start small, and as the stock goes higher, they add more, so it only has to go down a little bit for them to be able to make profit. They also are going to maybe change their numbers in this way, where maybe instead of doing $293 and $3.10, they say, Deck, I'm going to get filled at $2.75. I'm going to get filled at the price of $3.10, and I'm going to do my last price all the way up towards around $3.50. I'm going to do a total of, I'm going to do 500 shares at $2.75. It hits $2.75 and falls. I'll make a little bit. I'm going to give it more room, about 35 cents, and then I'll add 1,500 shares up here. So again, that's fine, because now again, instead of $2.75 entry, my entry is going to be all the way up towards around the $3.90. And then last but not least, I'm going to have one way up high at $3.50, which will be my main trade. My main trade up here is going to be 4,000 shares. So the thing is, if I actually do get filled at $3.50, my new cost basis at this time is going to be all the way on up towards probably around like $3.30. So the thing is, you're basically covering every single, exit you can. Okay, I'm getting filled here. Guess what? I'm making money. I get filled here. I'm making good money. Okay, I get filled here. I'm making a ton of money. And you're basically surrounding the area of where it's going to turn. You're surrounding the area of where it's going to drop. Remember, team, there's something crucial though about this. You must, no matter where you do, have a stop loss right here. If you just keep saying, okay, I'm going to get filled with big money here, and guess what happens? The stock starts squeezing and the stock starts going higher and higher and higher and higher and higher. Guess what? You are now losing more and more and more. Nothing's worse than losing 500 shares, 1,500 shares, 1,400 shares, and now you're losing like 7,000 shares as the stock is going on up. You are losing a lot of money. So no matter where your last entry is, stop loss right there. And if you're only getting filled one time, hey Deck, I'm getting filled at $3, stop loss right above $3 then. We must incorporate a stop loss. I don't want to put anyone on the spot right now. Is there anyone here who has blown up an account before? Now, you know what I'm going to say? I'm going to take a guess that you blew up your account and you are also a person that does not set stop losses. Got me. The thing is, I don't know one person who has ever blown up an account by setting stop losses. I don't know one person that's out there in the world that says, yeah, Deck, I usually buy stocks and then, if it goes right here, I get out right away. I've never met a person who sets stop losses who blown up an account. What most people do who blow up their accounts is they buy and then it falls and it falls and it falls and they say, oh, all right, I'll get out. And then they get out right here and there's minus $2,000. And then again, next day, they jump in on a play and it goes up a little bit and it falls and they say, oh, it has to come back up at some point. And they falls and falls and falls and then they lose their entire account, right? Don't do that. Guys, trust me. There are a million plays in the stock market. A million. There's a million plays that will happen, okay? We will see tons of plays, tons of action. If a play is not working out for you, move on from it. You guys have heard me say this analogy before, but really what it comes on down to in stock trading a lot of times is you guys just want to say to yourself, is this stock making me money, right? Is this play making me money or is it just a stress? I think about it as a relationship. In a relationship, your significant other should bring you joy, should bring you happiness. You should be excited to be with your partner. If you see your partner and you say, no, not her. If you see your partner and you say, oh, I just had a long day and now I have to go hang out with them. You are not with the right partner. You are not with the right person, right? If I jump in on CCLD and it's taking all my money, it's not, there's a billion other fish in the sea. There's a billion other stocks out there. Why are you just sitting there and saying, oh, I'm losing all my money. Oh, this sucks. Oh, this isn't fun. Click the sell button. Get out. But people just sit there and say, this sucks. Oh, I just lose more and more and more. This stinks. Guys, stock trading is an educational game. It's a game that we have to learn how to be able to do things the right way. But it's also a mental game, as in you have to be willing to pull the trigger. I could give you the best education in the world, which I believe I'm giving to you guys right now. But if I tell you, hey, set a stop loss, and you say, nope, not setting a stop loss, then you know what, guys? That comes on down to you just not listening. You have to be willing to be able to get out of a play if it does not work, if it does not, go the way we want. So this whole entire strategy that, we like to go over right here, this whole entire strategy that we're teaching, it really, again, it is developed almost from casino players. And it's why the casino does not allow this. It's pretty neat. Has anyone ever gone to a casino and you ever walk past the blackjack table and on the corner of the blackjack table, it'll say max bet. And let's say it'll say max bet. And I know most of the time it'll be like $2,000. Now, why does it say that? Why does the casino not allow any more than $2,000 on this table? And the reason why they don't allow it is because if you had a lot of funds, you would never lose. You might say, what do you mean you would never lose? And the thing is, if I had a person who had, let's say, $100,000 and I sat down at a blackjack table and there was no max bet, guess what I would do? I would sit down right here and I would say, hey, dealer, put me on in. Here's $1,000 bet. Boink, here's $1,000 bet. And the dealer again takes my money. He beats me. Guess how I can win all my money back? Now I put $2,000 down, right? Put $2,000 down. Now the dealer beats me. The dealer now has $2,000 of my money. Guess what I can do? I could put $4,000 down. Now the dealer beats me. Guess what? He again just took this $4,000 away from me. But now guess what I do? Now I put $8,000 down. He beats me. Guess what I do? Now again, take $16,000 down. So the thing is, in blackjack, you will not lose every single hand. You won't. You will beat the dealer 48% of the time. 48% of the time, you will beat the dealer. So the thing is, the dealer has that little edge on you, right? But at some point, you will win again. So if there was no max bet, you could just keep doubling your bet. And the moment that you win, right? The moment that you win, you would win all your money back. And now the casino would have nothing and you would be back to where you started. And let's say you just start getting a little bit of a hot run and you start saying, ooh, I won 1,000. I won 2,000. I won 3,000. Ooh, I just won a little bit of a run. I just won 2,000, 3,000. Oh, he just won one. Okay, let me just double my bet. Okay, I just got that back. Okay, I just won 1,000, 2,000. Oh, he just won 2,000. Okay, let me again do a $4,000 bet. Ooh, I just got that back. Okay, now let me win. Let me win. Guess what? If there was no max bet, you could literally just win at the casino nonstop because you could just keep doubling your bet. And the moment that you win, you get all your money back. So then you win one, you win two, you win three, you win four. And then guess what? You lose one, just double that bet, you get all that money back. You win again. And you would progressively keep making more money. So that's why they always say max bet. Even like Dana White, who gambles a ton, they say, hey, Dana, like your max bet is like $100,000, right? Because they would know he would just keep doubling it on up until he won it all back. They would never win. So this is almost like what we do in the stock market. In the stock market, a lot of times, if I see a stock that is moving itself on up, there's a lot of people in the world that do this. They say, oh, I'm going to short this play right here with 500 shares. Okay, awesome. Then the stock again moves itself on up even a little bit more, right? Stock moves itself on up a little bit more. You say, oh, it's going up a little bit higher. Guess what? I'm actually going to short this play right now with 1,000 shares. Now your cost basis is right here. Now again, the stock starts moving up a little bit higher. And you start saying to yourself, oh, moves up a little bit higher. I'm actually going to jump back in right here with more shares. Now I'm going to do probably about 2,000 shares right here. Your cost basis is no longer down there. Your cost basis is all the way up here. So guess what happens? If you just keep adding more money, the moment that this play eventually does fall, guess what? Now you make a ton of money as it comes crashing all the way back on down. Now you make money as it comes crashing all the way back on down. Now, if you could not do this strategy, and let's say you bought at the 500, right? And you couldn't add any more gains to it, guess what? You're at 500. You got to wait until the stock comes all the way back to this point before you even start making money. And that, that could be after you're down a ton of money. That could be after you're down a ton of cash, whatever it may be. So it is in the stock market, the rich do have an advantage. The people who have more money do have an advantage because they could always average up. Now, I do want to throw out a disclaimer right here. This lesson right now is not me telling you, go ahead and just keep adding on to all your losers. Please do not take this out of context. What I'm trying to show you is there are ways for us to get a better average, but do not say, oh, Deck just tells us to buy against spikes and just keep adding and adding and adding and adding until we again come crashing on down. No, that's not what I want. I want you to be able to figure out where are we going to fall, such as, okay, I think CCLD is going to fall at $3, bounce 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 at $3, $3, natural resistance line, $3 again, where we are probably going to hit and reverse. Okay, Deck, I'm going to do a shorting average at $3. Okay, I like the idea here. That's a good shorting idea. So yeah, I'm going to do an entry right here at the price of $2.90. That's going to be my first entry. I'm going to get my second price at $3 and I'm going to get my third price at $3.15. You got filled here, you got filled here, you got filled here. Your average is right here. And guess what? Now you're making all this money as the stock falls. Boom. That's what I'm trying to teach you today. Not, oh, this stock's going on up. Deck just said keep on buying. Oh, I just bought. Oh, I'm losing all my money. No, we're doing this at the reversal area. We're doing this at the reversal point so that we do have the best average. We're doing this at the reversal point so we can make the most amount of money. We're doing this at the reversal point so that we can be able to progress, to be able to take on top. All right. So that is going to be so crucial, so awesome to make sure that every single trader is all set, ready to rock and roll.